We've seen, the first good news is that from 2014 to end of 2015, we had a growth of about 2,095 keys for the service apartment sector in the GCC. So it shows a clear confidence from the consumer, that the service apartment is a recognized asset class that deliver the right returns and is, as I always define, the most understood touristic asset class in the area. The trends going forward is likely to grow. Slightly slow down for the current oil prices situations. Which is more impacting the confidence than the ability of developer in pursuing the service apartment project. So the forecast shows that by 2020 we will reach an additional 25,000 units, to the overall GCC current supply, which places the total number of keys just above the 86,000, which is an extraordinary number considering that 20 years ago, even 10 years ago, not even 15% of this was present in the current market. But even a more staggering number is that more than 54% of this asset class will be internationally branded. And as we show in our latest report, published at this conference, the Service Apartment Summit Middle East, is that the increase in branded service apartment in a given market in the GCC has a positive effect on the number and the quality of reviews the consumer, leave in all the possible available online social media channels. So it is a clear statement and a living proof that branded service apartment increase the added values of the tourism offering, the service experience, and the destination as a whole. So the trends are positive. In addition to that, places like Dubai and Abu Dhabi have demonstrated that the service apartment sector is a very versatile sector. Many business models can be applied to the asset class in itself, from a standalone serviced apartment to a condo business model to a fractional ownership type of scenario. Allow the developer and the investor to realize profit in multiple ways, and not necessarily just purely from a tradition of selling rooms and generating revenue, but also selling the asset in itself by unit, by fraction, or as a whole. So it is, in relative terms, more versatile and more suitable for markets where are heavily dependent on commodities like the oil price. Dubai is different because Dubai oil contribution is only 9% of the total GDP, so it's a very diversified economy. But if we look at the majority of the GCC and the majority of the biggest countries in Africa, they are oil-driven or commodity-driven economy. So the service apartment is very versatile, can adapt to good times, but also challenging times. I think what this graph has shown clearly is that despite there are challenging times, service apartments are able to cope better with the fall in other occupancy on average room rate. They are less volatile in this kind of time. So they're more predictable, there's more consistency in their performance trading. So in simple terms, they are dropping revenues less faster than hotels. So they are indeed a very resilient asset class. Is also versatile because they're very efficient in operational cost. Very little F&B, which tend to convert less net profits than rooms. So it is what I would call a recession-proof asset class. What the curve has also shown is that, yes, there is a healthy pipeline of hotels, but the service apartment start at least 15 years later to emerge as a key asset class. So we are 15 years behind the development pipeline on hotels. But to our advantage, and to the people that support the ambassador of the service apartment industry, is that we have also witnessed the pitfall of, the hotel market. So we have learned from this, pitfall and these challenges. So better quality of service apartment can come to market. Hence the reason that, in the Doha market, for example, service apartments are performing much better than hotels from both an occupancy and an average room rate in relative terms, so like for like in terms of same level of asset class. So which shows that we learn from mistakes, we build in the right asset class, they respond to demand, we can afford to operate and make profit in challenging time. So it is indeed, yes, the right asset class to take the tourism industry forward. In addition to that, because we are very, let's say, cost light compared to hotels, we are less inclined to have issues in embracing new ways of distributing the brand, such as Airbnb or the likes of the new holiday home types, because different units have different needs. So different units have also a number of bedrooms which can be sold twice, simply by selling each room independently rather than the entire apartment. So again, more versatile, more able to cope with the extra costs that come from joining the likes of Airbnb or now Google coming to the travel space. While hotels will always have the challenge that there is high cost of distribution by start, high cost of operation, so any additional cost will impact the bottom line. With service apartment, we can take on this cost and still making the same profitability. It's all about length of stay rather than only seasonality. Absolutely. If we look at the guest experience index, which is our index, the measure reputation and satisfaction in a given market, for the market of Jeddah, in the last 12 months, we had 3 properties from the Ascot Group opening, have placed Jeddah in one of the top 5 most satisfied market by the consumer, by the stayers, and the fastest growing year on year in terms of reputation by 6%, 6 percentage point, which shows that international brand come with a proven business model, come with a quality standard and a recognizable standard, which is very important, is what the people are buying. Why people are buying Coca-Cola? Because they know what you're drinking, and the same, they stay in an Ascot or stay in a Adagio, in a Fraser Suite, in a Marriott Executive Apartment, because they know exactly what they're gonna get in here and elsewhere. So it is fundamental that authority and developers support the engagement with the international brand from a quality level and a perception level point of view. There are also the service apartment, another very important characteristic. To be successful in having higher volume of bookings from social media or platforms like Booking.com, Airbnb, service apartments have been working much more than hotels in improving the imagery, the quality of picture, even video. Some put videos, 360 tours of the units. So, and they've been able to give to the consumer a much clearer idea of the end product expected when coming to destinations. So by improving the indirect contact with the consumer, which is almost direct now with technology, they've been able to capture better demand and capture more markets than hotels, which focus mainly on pricing and and packages. Image is very important, and service apartment has been able to give clarity to the market. Hence the reason is growing faster than hotels in terms of popularity.